Okay, let's start with introduction of management accounting. Remember, management accounting has 3 papers in ACCA. You have F2, F5, and P5. F2 now is called FMA or MA. F5 is called PM. I've already completed whole lectures on F5, and the advance of F5 is P5. P5 is an optional paper. So if you have come to F2, it means you have already studied F3, because without F3, it is not a good decision to study F2. So in some of the places, I will assume that you have studied F3, because without that assumption, it will be difficult to explain that part. Okay, so let's start with the introduction of management accounting. Obviously, we will not be able to give detailed introduction here, because understanding that introduction would mean you have to study management accounting. So I will give a brief introduction to management accounting. Remember, management accounting is information that helps management and better running of the business. So better running means mostly cost-wise, or it can be anything. Nowadays, remember, better running doesn't mean cost. We have the non-financial performance indicators as well, which you will study in F5 and P5. But management accounting helps management run the company better. So management accounting information is what management needs to do its activities. It is like a fuel. It is the input that they require. And remember, it is not called management accounting because management prepares it. It is called management accounting because it is prepared for the management. So we prepare it with management in mind. So prepared by management accountant. If you're working in an organization relevant to the management accounting, you will be called management accountant. If you have studied financial accounting, your work is relevant to financial accounting, you would be called financial accounting. So I said above, management accounting is management information that management needs to help in better running of the business. So what exactly is information? When we usually say a word information, we mean both data and information. But there is a difference. We have data is something that is in raw form. So it is not very meaningful. And information is the data processed into something meaningful. Example could be you do survey from customers, or you ask each customer how the product or a service is. That is data. But it will not give you any information. It would not be meaningful unless you take the whole data and then you find the result. And let's say from the data you find out that 80% of the customer are happy with the product. So then that would be something meaningful. Then it becomes information. So information is when data is processed into something meaningful. Okay, we have primary data, primary information. So I've written primary data or information. So they are separate things. There is primary data, there is primary information. Now we know what data is, what information is. I will only explain the meaning of primary. So what is the meaning of primary? So primary data or information is data or information collected for a specific purpose. Or you could say not used before. First-hand data. When you collect something for a specific purpose, it is called primary data because you have collected it for that specific purpose. Maybe it is outside the organization being collected, or maybe it is internal of the organization being collected, but we will talk about that later. But for now, primary data or primary information is something that is collected for the first time and is used for the first time, first-hand data. Next, we have secondary data. It is data already collected and used before. So, first-hand data. Secondary data is data or information that has already been collected and it is used for other purpose, and you collect it to use it for something else. Both data and information. Next, we have internal source of data, or an internal source of information is collected within organization. Example of this could be like computer or accounting softwares. So anything, any information, any data collected within organization is called internal. So internal can be primary, internal can be secondary. Internal can be data, internal can be information. Okay, so I've made this division a little bit shorter. And then external data is collected outside organization. Like very common source would be internet. So external data can also be primary data not used before, and or maybe a good example of this would be doing survey. Now it could be a survey that you're doing for the first time. So that would be external primary, or it could be a survey that has already been used for something else and then you use it, then it would be external secondary. So we have primary internal, primary external, secondary internal, and secondary external. But remember, the information that is collected, not all information is good information. Information needs to have quality. So it is, as I said, an input to the management. So this input needs to have some quality. If input is not good, remember, output will not be good. Output is the planning and control and decision making that we will talk about in a minute that the management does. So the better information provided to the managers, the better the decisions, the planning and control is going to be. So you can remember the word mnemonic accurate to remember these qualities, but it's not essential to memorize it. These qualities that I've explained here, that I've associated to the word with the word accurate, in different places you see different qualities being associated. The important idea is that you remember some of the qualities of better information. If you see, we have accurate, and then each separate word has accurate words, which is ACCURATE. So accurate means free of errors. Information should not contain errors. If there is error, obviously the output would also contain error. Concise, to the point, not bulky. So there is something called information overload. You will study in P5. So when information is too much detailed, usually management would not have time for it. So we need to make it concise, to the point, important things mentioned only. At the same time, being concise, information needs to be complete. Complete means every necessary details. Not every detail. If we put every detail, then it will become less concise. But there's a problem between concise and complete. They are inversely related. Inversely related means increase in one causes decrease in another. Directly related means increase in one causes increase in another. We will talk about this in forecasting chapter as well, but when two things are related, we say there is correlation. Correlation could be direct, or also known as positive, or it can be indirect, or also known as negative or inverse. Direct correlation means when one thing increases, another thing increases with it. Like when sales unit increase, sales revenue will increase as well. But inversely related is when one thing increases, another decreases. Like when sales price increases, you will study in F5, the demand decreases. So completeness and conciseness are inversely related. If you want to make information concise, which means you want to make it short, then it loses its completeness. If you want to make it complete, it loses its conciseness. So there should be a balance between concise and complete. So you should have equal focus on both. You can use the word C for cost benefit as well. So remember, it is just a guidance. So cost benefit means benefit of information should be more than the cost incurred on it. But usually you don't know whether if you spend money on collecting information, it will give you more benefit than the cost that you are incurring. But it is just a guideline that if there is a way of knowing that you're going to spend money on something, is it going to be that beneficial or not? For you guys, for example, if you're spending money on courses or books, is it beneficial to spend that much money on it or not? But usually you don't know. For example, you're purchasing a book or you're paying for lectures. You don't know whether those lectures or book is going to be beneficial, whether the benefit is going to be more than the cost or not. But if there is a way of knowing it, we should consider the cost-benefit relation. Update most recent information. If information is not updated, it automatically becomes inaccurate. Like in ACCA, professional level exam, for example. Previously, they were paper-based exams, but now they are computer-based exams. So the fundamentals level as well. They were paper-based exam, but they have become computer-based exam. So we need to be updated. Whenever we are making budgets or whatever we are doing, we should use the latest information. Reliable means trustable. Means from a trustable source. Whenever you collect information, you should make sure that it is from a source that is trustworthy. Otherwise, we would not be confident in relying on those information. And then accessible. User should have access to it. For example, you prepare this information for the manager, then manager should have access to this information. It should not be locked from the access, or it should be reachable to them. Next is timely, provided when needed. Let's say management is making a decision and they need information, and the decision has already been made, and then you bring information, then that information would not be effective. Economical and cost benefit have very similar meaning, but it means is source should be as economic as possible. So if you can collect information from different sources, try to find a source that doesn't require a lot of money. So there are other qualities you can include here as well, that like information should be communicated, but this is just a guideline that information needs to have some quality in order to be good information, so that management can do its job better. So just as an overview, management does many things, but there are three main things that a manager does, which is planning and control and decision making. Planning and control are usually together, that's why they've been linked, and decision making is something that is extra that they do. So what is planning? Planning is setting direction for the organization. Looking ahead. Remember, planning gives organization a sense of purpose. So with planning, it gives the organization a sense of purpose, means the people that are working in the organizations, they want to know where the organization is going. So if they know that, they will try and make efforts so that that purpose, that direction is achieved. So without planning, you could think of it like a ball. People would not know where to push it. So one person would be pushing from one side, another person would be pushing from another side. But when there is a sense of direction, when there is planning, all the efforts, if there is goal congruence, should lead to a specific direction, and that plan will be achieved. An example of planning you will study in F2 level is budget. Remember, you might have seen the definition of budget as plan expressed in numbers. And numbers means monetary terms. So you will study when we look at the type of planning and different level of planning, there is different level of monetary terms involved. At higher level plans, usually there is less monetary terms. At lower level, there is more monetary terms. But that is something else we will talk about. So planning, just to give you an overview, is divided in three parts: strategic or top level. Strategic or top level concerns the whole organization, and it usually is for a long term. So top level plan covers wide area, it is for long term, and there are less numbers. So it is mostly theoretical, expressed in numbers, and less detailed. So these four qualities: wide area, long term, less detailed, more words than numbers. And then I will directly talk about operational level. Operational level plan is the lowest level plan. It covers the lower area, short term, more details, and less words. And then operational level plan could be, for example, for a specific department. A strategic or top level plan could be for the whole organization. For example, an organization that has many divisions and stuff. Any plan that is done for this whole organization will be considered as top level. And then tactical or middle level is a plan for a specific region or division of an organization. So tactical or middle level would be medium term. The area that it covers is medium. It will have average details, and it will have both numbers and words. So the higher level the plan is, the narrow it is. The lower level the plan is, the wider it is. Remember, planning involves two things. It is what and how. What are the objectives of the organization? What is it that the organization wants to achieve? And then strategy is how does it want to achieve it. For example, strategy could be being number one in the market, service-wise, product-wise, or maybe it is a public sector organization like police department, reducing crime, or if it is an NGO, non-governmental organizations, maybe you want to offer product or service at lower price. And then strategy is how you can achieve it. There could be different way of doing things, different options available. An example would be price penetration and market skimming that you study in F5 in pricing chapter. Pricing penetration means charging lower price. Market skimming means charging higher price, but it is not something that I will talk about in details here. Remember, I said at the top that planning gives organization a sense of direction, a sense of purpose, and then people will try to work on it so that purpose is achieved. But remember, the goal of the people in organization and the goal of the organization should be same. Then it is called goal congruence. It is the alignment of the goals of the employees and the goals of the organization. When that happens, organization has better chance of achieving its objectives. If employees work for their own goals, each of them, it will be like pushing that ball in every direction. Okay, next is control. Control is correcting divergences from plan. We make plans, but plans don't always work. Even you might have study plans, very nice design plans, but usually they're not effective if there is no control, if you don't regularly see whether you're working on that plan or not. So planning without control is meaningless. That's why it is put together as planning and control. When you look at planning and control cycle as well, there is few steps involved in planning and there is few steps involved in control. So whenever we make plan, we need to regularly check that whether what was in the plan and what is actually performed is the same. If it is not the same, we should make efforts so that it becomes the same. An example of control you will study in F2 level is variance analysis. Variance analysis is when you look at the difference between the budgeted and actual performance. And then we have decision making. Decision making is choosing between alternatives. So sometimes there are options available to manager. Management needs to decide. That is called decision making. An example of this would be make or buy. You will study decision making topics in F2 are not there. They are in F5 level, but I will, as an example, I will write here make or buy decision, whether to buy something from outside or make it yourself within organization, limiting factor analysis. Remember, decision making is not something that is done regularly. Planning and control is regularly done. Like top level plan would be done less frequently, lower level plan is done more frequently, but it is regularly done. For example, budget would be made every year, and then variance analysis will be done every year. But decision making is not something that is regularly done. It is done when there is requirement, or there is a word called ad hoc, when required. So management would decide when there is opportunity to decide. They don't just say, okay, let's make a decision today because we haven't made any decision in the long term. When there is opportunity for making decisions, then they will make decisions. And usually non-executive directors that organizations have, most important role is in this decision making. So this is a brief introduction. Obviously, these are just scratching the surfaces of these topics. These topics regularly come in F5 level, in P5 level, so your understanding will become better and better. So this is it for introduction. Next topic we will do is cost classification. So this is it for today.